Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2, we'll go over the risks, potential rewards, and how thematic ETFs may fit into a long-term investment strategy in 2025. Here's what drives their wild swings. Concentration risk. Holding 30 stocks in AI instead of 500 across industries means one bad earnings report can hurt the whole fund. Hype cycles. Themes like self-driving cars can get overvalued fast, leading to sharp corrections. Macro sensitivity. Rising interest rates or policy changes, e.g., green energy subsidies ending, can hit thematic ETFs harder than the broader market. ARK Innovation's roller coaster performance shows this well. Its focus on disruptive tech led to massive gains in 2020, then steep losses when growth stocks cooled. If you invest, expect turbulence. Thematic ETFs versus sector ETFs. What's the difference? It's easy to mix up thematic and sector ETFs, but their risks aren't the same. Sector ETFs, like a financials or healthcare fund, track established industries. They're narrower than the S&P 500, but still hold stable, revenue-generating companies. Thematic ETFs target emerging trends, often with younger, unproven firms. A fintech ETF might include startups with no profits, while a financial sector ETF sticks to banks. When to choose each? Sector ETFs. Better for steady exposure, e.g., healthcare during demographic shifts. Thematic ETFs. Best for high-risk, high-reward bets on trends you deeply understand. Remember, thematic ETFs assume a trend will grow as expected. If lab-grown meat stalls or AI regulation tightens, even the best-run fund can struggle. That's the trade-off for chasing the next big thing. How to evaluate thematic ETFs. Investing in thematic ETFs isn't just about picking a trend. It's about choosing the right fund to match your goals. Some focus on futuristic tech, others on sustainability, but not all are built the same. Before jumping in, you'll want to look under the hood to avoid costly surprises. Key metrics to consider. Like any investment, thematic ETFs come with data points that reveal their strengths and weaknesses. These metrics help you gauge risk, cost, and performance at a glance. Assets under management, AUM. A higher AUM often means better liquidity and lower trading costs. For example, ARK's large size makes it easier to buy or sell without big price swings. Expense ratio. Thematic ETFs often charge more than plain index funds. A 0.75% fee might seem small, but it adds up over time, especially if returns are inconsistent. Liquidity. Check average daily trading volume. A fund with thin volume could have wide bid-ask spreads, making trades pricier. Tracking error. Some thematic ETFs don't track an index well. If a fund's returns stray far from its benchmark, it could signal sloppy management. Past performance isn't a guarantee, but it's worth checking. Look at how the ETF behaved in downturns. Did it drop harder than the broader market? That's your clue to resilience. Due diligence for thematic ETFs. Metrics alone won't tell the full story. To really understand a thematic ETF, dig into these areas. Holdings. A roster of companies shows if the fund walks its talk. A clean energy ETF stuffed with legacy utilities isn't what you signed up for. Management team. Some ETFs rely on active stock picking. If the fund's strategy hinges on its team's expertise, like ARK's research-driven approach, check their track record. Theme, sustainability. Ask if the trend has staying power. Cloud computing? Likely solid. A niche like drone racing? Riskier. Here's a pro tip. Compare the ETF's holdings to its peers. Two robotics ETFs might have very different portfolios. one heavy on industrial bots, another focused on AI software. The best fit depends on your conviction. The bottom line? Thematic ETFs can be powerful tools, but they demand extra homework. Skip the fine print, and you might miss red flags hiding in plain sight. Strategies for incorporating thematic ETFs into your portfolio. Thematic ETFs can add excitement and growth potential to your investments, but they work best as part of a balanced strategy. Too much focus on a single trend can leave your portfolio vulnerable. Here's how to mix them in without overdoing it. Balancing thematic exposure with diversification. Thematic ETFs are like spices. A little adds flavor, but too much ruins the dish. Most investors should keep them as a small part of their portfolio, typically between 5 and 15%. Here's why. They amplify risk. A fund focused on AI or green energy might swing wildly based on news, policy changes, or tech breakthroughs. They overlap with other holdings. Many thematic ETFs include stocks, ChatGPT said, also found in broader tech or growth funds. Check for duplicates. They lack stability. Blue chip stocks and index funds provide a steady base. Thematic ETFs are the icing, not the cake. A simple rule. If you invest 10% of your portfolio in thematic ETFs, spread it across 2 or 3 unrelated themes. For example, pair a robotics ETF with a healthcare innovation fund. This way, one slump won't drag everything down. Long-term versus short-term approaches. Thematic ETFs can serve different goals depending on your timeline. Long-term holds. Some trends, like automation or renewable energy, could take years to play out. If you believe in the theme, buy and hold with these tips. Reinvest dividends to compound growth. Ignore short-term noise. These ETFs will have down years even if the trend is intact. Review holdings annually. Make sure the fund still aligns with the original thesis. Short-term trades. Other themes like meme stocks or niche crypto plays might be temporary. If you're chasing momentum, set strict exit rules. Decide in advance when to sell, whether it's a 20% gain or loss. Use limit orders to avoid emotional decisions. Keep position sizes small. Never bet more than you can afford to lose. Thematic ETFs can thrive in either approach, but mixing strategies gets messy. Pick one lane. Long-term investors shouldn't panic sell dips. Traders shouldn't cling to fading trends. Either way, keep the big picture in mind. Thematic ETFs shine when used with purpose, not as a substitute for a diversified portfolio. Video. Thematic ETFs like ARK Innovation offer a way to bet on the future, whether that's AI, clean energy, or biotech. They pack high growth potential but come with higher volatility. While they can supercharge a portfolio, they shouldn't replace broad market funds. Before investing, dig into the specifics. Check the fund's holdings, fees, and track record. Make sure the theme has staying power, not just hype. Most importantly, match your allocation to your risk tolerance. A small stake in a trending idea won't make or break your portfolio, but going all in could. Stay curious, stay diversified, and let thematic ETFs complement, not dominate, your strategy. The right balance keeps you ready for both breakthroughs and setbacks. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.